You're watching us here on Chartbusters. I'm Mangla Malu. With me, as always, Nigel D'Souza. We're looking at the markets. Well, they're doing not so bad. The Nifty Bank holding up in the green. But let's talk about individual stocks. Larsen Toubro and the Larsen Toubro Infotech as well as Mindtree merger has come into effect yesterday, forming the sixth largest IT company in the country with over $4 billion in annual revenue. Rima Tendulkar caught up with Debashis Chatterjee, who's the MD and CEO at the newly merged company, and began by speaking about revenue synergies that will emerge from this merger. Let's listen in.
The primary objective of this merger is how do you cross-sell and upsell and create more revenue opportunities for ourselves. And the reason why we are very confident about that is if you look at the number of clients that we'll have as a part of LTI-Mindtree, it's almost like 700 plus clients, and there is only 10 to 12 clients where we have overlaps, which means where we have been servicing through the separate entities earlier. So there's a huge opportunity for us to cross-sell and upsell, and that's what we are looking forward to. And that's why there will be a lot of focus in terms of providing end-to-end capabilities in terms of what we call as full stack capability, where we can do all the way from customer experience to supply chain transformation, including data and cloud. So that's what we are looking for in terms of cross-selling and upselling. And that's why we are going to focus in terms of creating revenue synergies, as we go along into this in the new entity.
How soon before you realize these revenue synergies? Can it kickstart from day one? And talking about the revenue opportunity from cross-selling and upselling, the annualized revenue run rate on day one of the combined entity is $4 billion. Do you think, say, 6 quarters down the line, FY24 end, the combined entity could be a $5 billion company? Is this a realistic assumption?
Well, I think that's what our aspiration will be. That will be our endeavor. But again, we need to also look at all the other aspects. I think to put it in a different way, if you look at the growth trajectory of both the companies, we have been focusing on profitable growth and also industry leading. And as a combined entity as well, the primary objective for us will be to continue on the journey of industry-leading profitable growth. So if the industry is growing at a certain percentage, we definitely want to do better than that, and it has to be profitable growth. So keeping that in mind, there is no reason why we should not be growing, the way we have grown in the past.
Okay. So talking about profitable growth, the combined entity EBIT margins are closer to about 17.5%, 17.3% if I take the Q2 numbers. Is this the margin range we should expect for the combined entity? And just in the near term, do you think there will be integration-related margin headwinds?
I think we have already called out that in the past, that, just to take a step back, we announced the merger sometime in May this year, and we had set a timeline of around 6 to 7 months before we can have the day one. Day one is basically the day LTI-Mindtree comes into existence, which has been yesterday. So yesterday was the day one. And, there will be definitely a time required to ensure that all the systems and the processes, the way people work with each other, all these things will, this is where the rubber meets the road. And our aspiration is, based on the planning that we have done in the past, our aspiration is to get through all these things before the end of this fiscal year. That's our aspiration. And if we can do that, that's pretty much a record time by which we can achieve that. And that's the primary goal that we have at this point of time. To your question specifically, yes, of course, there will be certain one-off expenses that we'll be taking in Q3 and Q4 because of the integration cost. But having said that, if you look at our overall journey in the last several years for both the entities and now as a merged entity, as a combined entity, we will be focusing in terms of keeping our EBIT and EBITDA margins at a certain level, and then invest back into the business. That has been the philosophy as we have been growing, and that is the philosophy that we'll continue to follow as we go along. Now, to call out a specific number is a little too early, because I need to still understand, it depends on the overall synergies that we can create, etc. So you have to give us a little bit of time. But I'm sure we will find out the range at which we will operate and follow the same principles that we have followed in the past.
But can the range be higher? Because now you will have a lot of cross-selling opportunities, synergies. Even on the cost side, there will be cost optimization. So without getting into numbers, can we assume that, say, 1 year down the line, the margins of the combined entity will be higher than what they are today?
Well, that's the aspiration. I mean, if you have done this merger, there are certain rationale, and one of the rationale is that over a period of time, we should be improved. We should be able to improve the EBITDA and the margin as we go along. But please try to understand one thing. I mean, the whole philosophy of this merger is around how do you create revenue and synergies. We have been very vocal about the fact this merger is not about downsizing. So we want to make sure that the employees that we have, we can leverage them fully in terms of focusing on the markets and the revenues. So to your point, there will be definite cost synergies that we'll arrive at, and as we get into the for example, real estate, there will be some consolidation opportunities as we go along, because two entities may be operating in the same city, which we don't need. We don't need so much of real estate. We can combine them. So this is just an example. But I would say at a broad level, right now, the focus will be in terms of revenues. How can we create more synergies in terms of revenues? But as we go along, there will be definitely cost synergies available to us.
All right, so that was the big story of the day. The management says the cost